Welcome back. We're in conversation now with Bharat Madan, Group CFO at Escorts. Bharat, good morning. Strong showing in Q3. It looks like steady sales volume. Does this mean a turnaround? Do you feel these volumes can be sustained?
No, we believe, I think after the last 3 quarters of downtrend in the industry, now we're seeing some revival happening on the ground. So in January also, like, the industry was positive, and we expect this quarter with the good Rabi harvest, I think the season should do well. So we expect there will be positive growth, maybe a single-digit growth, but it will be positive for the industry after last 3-4 quarters of negative growth.
On a Q-on-Q basis, the tractor industry has seen better momentum. For Q4, what's the final run rate expected for the year?
So Q4 we're expecting should lead to positive growth for the industry, and I think, but for still overall, since the last 3 quarters have seen negative growth in the industry, so full year this is still industrial, there may be somewhere between 6 to 7% negative growth. But we expect, I think, Q4 onwards, the growth momentum will start in going to FY'21. We expect the momentum will continue, and we still have some single-digit growth possibility in FY'21.
Okay, but you'd guided about seeing the volume recovery in FY'21, but a full-blown recovery should be visible only by FY'22. Do you sense that this growth will continue to languish? What's been impeding the growth, and any challenges that you believe will continue to persist in the near term as well?
No, I think the general phenomena, I think when you go through the few quarters of degrowth, then it takes some time before the momentum really picks up for the industry. So that's why we're expecting maybe if this Diwali season, if you got a really good monsoon and the Diwali season, festival season, especially October-November period goes well, then you can see very steep recovery happening after that. But since the first half will be slow, that's the thing. On a full year basis, FY'21 may not see really that sort of drastic growth. But yes, FY'22 can see the full impact.
The street has been attributing, Mr. Madan, a large part of the decline to slow recovery in infrastructure project as well. With the government's push now on infra, the budget announcements coming in for funding, can the sector finally revive, and how much of it then do you stand to gain?
Yeah, definitely. I think that is one of the reasons why the industry also slowed down. So we didn't really see much growth happening on the agriculture users of the tractor, because the farmers obviously had to still use the tractor for their cultivation. But I think it was more intra-led degrowth that really led to the decline in the industry also. But now with the government initiative coming back with this good announcement even on the road project which they're expecting and the good spend by infra side, we expect the recovery should happen.
So if there is continued sluggishness in the infra space, will the pickup in agri be enough to offset the impact?
Well, I think we'll have to see on the ground really how the money gets released. There are a lot of projects where the money has been blocked now with the government. I think when the money starts getting released to these projects, then definitely we'll see some revival happening. So as of now, still a lot of demand on the construction side is dependent on totally public spending, and our private capital is still missing, I think, on the ground. So that is one of the real issue, I think, which we are still facing in all those 2-3 years in the past. The real estate hasn't really done well. So, but yes, the government was spending good money in building roads, etc., road, ports, metro networks. I think all the spends were happening. So if that activity also continues, I think that could be a good push for the infra side, and it can lead to good demand for the certificate space too.
Budgetary allocation for schemes in the agri sector increased by 30% for FY'21. Are provisions made towards increasing income realization from these activities robust enough to boost rural disposable income and consumption?
Like you say, it's basically the industry which was really impacting the volumes. Otherwise, if you look at Escorts number, we've done better than industry in the first 9 months of this year. And we expect on full year basis also we'll likely end up with some gain in the market share. And our degrowth will be lower than the industry degrowth. Construction equipment, definitely the industry had really gone through really bad times with the financial service space that really impacted the demand on the ground, because most of those customers which we serve are really the first time user, first time buyer sort of profile. It's really depending on the 90%, 95% on financing. And with the sort of issue which we face in the NBFC space, actually financing was becoming one of the major issues that really led to slowness in the demand. But now we expect since come again from 1st of October 2020, the new emission norms setting in. So that really you see some pre-buying happening before October 2020. So it's going to really see good boost in the demand on the construction equipment side also.
Analysts remain concerned about the volume softness in tractors and construction segment, which could possibly keep margins under pressure. Any outlook on that?
I think one of the issue which will still remain fairly unaddressed, I think, will be on the purchasing power in the hands of the farmer. Because like we're expecting it to be a good harvest even in the Rabi season. But again, the MSP while has been high for food grains and other crops, but that's a very limited procurement which the government does. So the balance of the producer still has to go to the mandis for the market for sale, where the realization may not be really as high as it's been predicted at the MSP price. So that could be one challenge I think which will face on the ground. So we think I think the last 3 years we're not really seeing much impact on the farmers' income really getting increased. And the spends on the Manrega scheme also I think continues to be more or less in the same level. So it's no major increase which is seen happening even in this project. So it could be challenging, but it will take some time for really the impact to really come back into the demand scenarios. We don't think it will happen in the short term, which is why we are not predicting any steep recovery happening on the agriculture side right from day one. I think it will take its own time, I think, before the growth really sets in.
Right. The railway equipments business, wanted to understand what your current order book is, what's the update on execution, and we also got an approval for 3 new products or other projects. Tell us a little bit more about that.
So railway business really has been doing well. I think if you look at the last 3 years trajectory, I think they've been growing at 20-25% sort of CAGR, and the current order book really signifies really it will continue to maintain the same momentum and going forward for next 2-3 years. And then new products which are in the pipeline actually are seeing very good demand. So we're getting good orders on this. Our new product mix has really improved to almost 44-45% in the overall portfolio in the railway business, and it continues to grow. So only challenge with the new product is the margins initially are low. So obviously it will take some time before we localize the product and the margin really start improving. But I think on the revenue side, we expect the business will continue to do well.
Okay, Mr. Madan, good to have you on the show. Thank you so much for taking the time out. Let's wind up then in this edition of The Market. But if you're guessing which billionaire is having a great 2020 already, any guesses?